I'm a big fan of companies that cater to rural America. These businesses often supply essential services that millions of people depend on, while being completely ignored by Wall Street. For every trendy hype stock, like Peloton or DocuSign, there's a successful if boring investment that's provided decades of steady value to its shareholders. Black Hills Corporation is one such company. This is a dependable Midwest utility provider. And they've paid 51 years of continuously rising dividends, while also offering better dollar-to-earnings value than many of their peers. In this video, we'll look at what Black Hills Corporation does, and whether or not they are a good investment. What does Black Hills Corporation do? Dividend Kings are stocks which have raised their dividends for at least 50 consecutive years. Most Dividend Kings are well-known businesses like Johnson & Johnson or PepsiCo. The majority of these businesses are large and internationally diversified with a massive customer base. Black Hills Corporation isn't any of these. This is a regional utility company with a mere 1.3 million customers. They provide electricity and natural gas services to residents of Arkansas, Colorado, Iowa, Kansas, Montana, Nebraska, South Dakota, and Wyoming. Black Hills Corporation is a regulated utility company, giving them a wide moat advantage. For the unfamiliar, regulated basically means there's little to no competition and one company, in this case, Black Hills, can hold a regional monopoly over the electric grid. This is good for investors, because it gives Black Hills stable recurring revenue and low volatility. Speaking of revenue, let's look at this company's business metrics. Black Hills Corporation fundamentals. Like most utility stocks, Black Hills Corporation has underperformed the S&P 500. They've delivered an average annual total return of 9.20%, compared to the S&P 500's 12.34%. Disappointing, but understandable. This is a slow and steady regional business. It's never going to provide high growth like a tech company. That said, Black Hills is insulated from global events. And the stock's boring nature means it's unlikely to face disruption. At the time of posting, chip maker Intel is down almost 10% in after-hours trading. While semiconductors are interesting, and I'd highly recommend the book Chip War, it's an investment sector that requires a lot of technical knowledge and expertise. Semiconductor technology changes every year, and there are dozens of international players, all competing with each other. In comparison, a business like Black Hills Corporation is relatively easy to understand. The company has a regional monopoly on electricity and natural gas, and they get paid monthly from their customers. Personally, I'm okay with lower growth if there's an element of safety. Plus, Black Hills Corporation is an income investment. People buy this business for its dividends. And in terms of dividends, Black Hills delivers. The company has a starting dividend yield of 3.52%. And Black Hills has paid shareholders a growing dividend every year for the past 51 years. They also have a 5-year compound annual dividend growth rate of 5.89%. If you had bought this stock at the start of 2021, you'd have earned $2.29 per share. And by 2022, your dividends would have increased to $2.41. That's a decent pay raise for doing nothing. On top of this, Black Hills has a dividend payout ratio of only 59.65%. This is great, because it gives the business more room for future increases. And finally, I want to cover the stock's PE ratio. Many utility companies trade at high PE ratios despite their sluggish returns. Consolidated Edison has a PE of 20.79, and a 5-year dividend growth rate of 2.74%. The York Water Company has a PE ratio of 33.16, a starting dividend yield of 1.77%, and a 5-year dividend growth rate of exactly 4%. Meanwhile, Black Hills Corporation has a PE ratio of 17.61. This isn't bad, especially for a utility company. And it means you're paying significantly less for shares than you are with a business like York Water. Black Hills also has a higher starting dividend yield than Consolidated Edison or York, and a better 5-year dividend growth rate. Conclusion. I don't think Black Hills Corporation's rural Midwest customer base offers a lot of fast growth potential, sorry citizens of Newcastle, Wyoming. But this is a dependable utility company. And Black Hills Corporation has a long history of rewarding shareholders. The high starting dividend, reasonable payout ratio, and decent PE all look good. And I'm definitely adding Black Hills Corporation to my investment watch list. Disclaimer, this video is for entertainment purposes only. It is not financial advice, always do your own research.